We can start. We are live now.
Hello everyone, good afternoon. Welcome to this webinar new series, the MTF Masterclass, Discover the Power of Margin Trading. I'm Nagaraj Shetty, one of the senior technical research analyst at HDFC Securities Prime Research. Now we are going to discuss about the MTF and various topics regarding to MTF. So the friends, without wasting any time, we'll begin the slides. Initially we can have an agenda. The agenda is the MTF, what we are going to discuss in today's next 15-20 minutes regarding the MTF calls and the market. First, we'll discuss about the concept. You all know that concept. I'm not going to take much time, just go through about the brief things about the MTF, benefits and risk of margin trading. Then we'll discuss the products offered by HSL Prime Research, examples of return calculation, just an example, and open MTF positions right now where you can initiate immediately. They are open positions and the technical outlook of the market. And technically, we will discuss the short term, long term, so many things about the market. We'll also discuss the where to invest, which sectors are looking positive, where the Nifty is headed, and which broad markets or the large caps where the momentum is building up. We all discuss in the next 15 to 20 minutes. Friends, the concept is margin trading facility. Margin trading facility allows investors to buy the stocks by paying only a portion of the total cost, with remaining amount funded by the brokers. Here we are HDFC Securities as a broker, which charges interest on the loan amount. This provides the buying power and can amplify both the potential profits and the losses due to the leverage offered. MTF is a product approved by the exchanges and is generally suited for the experienced investors with a high risk appetite. And the securities purchased under MTF are generally pledged as a collateral, meaning the traders can have ownership of these stocks while the broker holds the security interest. So the friends, benefits: increased buying opportunity, buying power, allowing investor to take a larger market positions than their available capital would allow. Normally by giving a small amount of corpus, you can add the loan from the margin and you can buy the whole corpus of the stocks. Potential for high returns in case of favorable market conditions, as the returns are amplified by the borrowed amount, as well as same applicable for the reverse for also when the losses are will have losses in a larger term. The risk, just as profit amplified, the losses are also increased proportionately when the prices fall. Sometimes the forced selling is also happens. If the stock price declines, the broker may liquidate your positions. Margin call will come to recover the funds, especially if additional collateral is not provided. So interest cost, you'll have to bear the interest of the borrowed amount, like a loan, what you are taking by paying the mortgage, which adds to the overall cost of the trade. So friends, these are the small concept and do's and don'ts. What are the important benefits and the risks of the MTFs? You all know that we can easily Google it from the browser as well. So now let's come to the important points, the products offered by the Prime Research team for the short term. Friends, we have two types of MTF products for the short term as well as the positional one. The short term is the one, this is for the investors with the high risk, as I mentioned, those who are wanting to take a benefit of the market swings, smaller swings like friends. Now we are nowadays we are looking, the market is in a very volatile, moving in a broader ranges, breaking out of the ranges, breaking down of the ranges. Sometimes it gives the ample opportunity within a swing volatility within a shorter period of time. We want to capture that swings in the short-term MTF ideas. That is perfectly short-term MTF ideas, mid-cap category, mainly of mid-cap segments of a universe of MTF list containing around 1,000 stocks. We have a MTF list in our HSL and which consists around 1,000 stocks. Within that 1,000, we choose the mid-cap category. The time frame would be given around 10 days. The purpose is to serve the short-term swing ideas and the volatility in the market. Whenever the short-term buy comes, we used to give on the bottom reversal, and whenever the underlying or the stocks reaches at the higher level within the short period of volatility, we tend to give the profit booking prematurely or the target, and which gives us the shorter time duration to gain the short-term upside momentum in the market. Number of calls we target for the month is around 25 to 30, which is reasonably well during this, considering this the market conditions. And we expected the return we give 4 to 7% depending on the market trend. Nowadays, the MTF is not moving that much. Sorry, Midcap is not doing that much. Broader markets are showing some consolidation phase compared to the larger time frame. In this scenario, we are try to give the 4 to 7% returns prematurely book it we in terms, and we wait for the target when the market condition is favorable. The short-term ideas, large cap, we take the universe of NSE 200 MTF, we give a time frame of 15 days, and the purpose is to serve the short-term swing ideas. Same as happened, we use it in the mid-cap category the same way we used to take the opportunity in the large cap category as well. Within the 200 NSE 200 or F&O derivative list. Total number of call we target to give around 10 to 12 in the month, and expected return would be around 3 to 5%. We try to capture depending on the market condition with the reasonable risk and reward ratio. Friends, this is the positional MTF calls. As I discussed previously, the short-term calls, the positional call is like a positional investment, what we are doing, little larger term, looking at the longer term in the market, and avoiding the noises in the market, avoiding the volatility, short-term volatility in the market. We try to catch the longer term in the particular stocks or a particular sectors, and we look to give some decent returns in this positional MTF calls. The universe we take the MTF list containing the same 1000 stocks. We have an MTF list which already consists the 1000 stocks from the whole universe, from the mid, small, micro cap and large cap as well. Time frame we give a 2 months period of time. Purpose is to serve the positional swings. Whenever the market breaks out of the ranges, break out of a consolidation, it takes the upside momentum for some particular period of time. We try to catch those particular period of time momentum for the stocks as well as the market, and we give the stocks on the basis of that, and we try to capture the positional swing ideas and the volatilities in the stable market condition in a trending market condition. So the total number of calls we try to give around 15 per month, and expected return we try to take around 8 to 15%. We give first target somewhere around 10% and second target around 15 to 16%, depending on the market trend. We capture it. The similar way, the positional MTF calls on the large cap categories also of the same thing. The universe we try to take around NSE 200 and the derivative stocks in a cash segment, and the time frame we give around 45 days. And the purpose is the same, to serve the positional swing ideas and the volatility for during the stable or a upside trending market, and the expected return would be around 7 to 12. Little smaller returns compared to the mid-cap category. Mid-cap stocks tend to give high volatility on the higher momentum on the upside, while the large cap category, while the F&O category more often gives the conservative returns. We try to take around 7 to 12% depending on the market. We give 7 to 8% for the first target and 4 to 5% additional for the second target. So similar way we give the ETF calls on the MTF side. Benchmark index, it depends on it focuses on the benchmark index as well as the sector indices. The universe is the ETFs indices from the MTF universe. The total 15 liquid indices which are there in the MTF, we try to give in this MTF ETF calls. The time frame would be around little larger, around 3 months, because it totally depend on the underlying sectoral moment, indices moment. Normally compared to stocks, the indices moment are very small compared to the stocks volatility. So we give 3 months and the serve to positional swing on the benchmark as well as the sectoral indices. Whenever the sectoral indices, particular sectors forms a bottom reversal after a downward correction or after a consolidation movement, or its breakout of the consolidation, we use such opportunity and tend to give the positional ETF on that particular benchmark or index to give the maximum benefit. Total number of calls we give around 12 in a year. It is slightly conservative, depends on the market, depends on the sectoral moment, and we expect return around 4 to 5% depending on the market trend. So friends, positional stock ideas, this works out like this, how the profits are calculated. Just an example, it's not an advisory or not in a recommendation. We just give the examples of the how the profit will be calculated. In this slide on the 10th of November, the calls has been issued on the Ujjivan Small Finance Bank around 51.98 to 49.50, which is the range. The current market price was around 51.98, and we are asked to average around 49.50, and 48 was the stop loss, given a target for 57 and 61 in the next 2 months. On 24th, exactly after 15 days of the initiation of call, we issued the premature book profit, given the market condition where the market was correcting and recently yesterday where the mid cap and small caps are showing some kind of a consolidations. We prematurely booked it at 54.80 while we have given 51.98 yielding around 5.4%. The example would be if you had taken if you had invested 1 lakh with the leverage position in the MTF, had taken 2 lakhs of MTF loan, that comes to around 3 lakhs. You could have bought around 5,771 quantity of Ujjivan Small Finance Bank shares around this 3 lakh your volume, and the premature book profit given around 54.80, around 2 rupees 82 paise kind of gains we had gained in a 15 days with 5,771 quantity. That comes to around 16,274. If you calculate the last 15 days interest, per interest 12% per annum interested, if you calculate as an example for the 2 lakh loan you have taken, that comes to around 1,000 rupees for 15 days, and total gains will be calculated somewhere around 15,270. Net investment was 1 lakh and net profit was 15,270 within 15 days. This is the kind of leverage we give whenever the market or whenever the stocks moves in front as in favor of your positions. The leverage, the kind of the profit is amazing. We try to give this risk and reward ratio. Obviously, as I mentioned, when the stock goes against your positions, you tend to lose, but we give a proper risk and reward management, we maintain that kind of reward ratios. So even though we give a 70%, 75% success ratio, on that 75% earnings, on that 75% success ratios, you'll earn, even though despite 25% you lose the money, you'll earn the good amount of money with this kind of example. So friends, our open positions right now, you can initiate the green colored marks are the calls issued in today's session, 25th of November. So M&M, Union Bank, Mastek, Sonacoms, Rallies and NBCC, these are the open short-term calls. Most of the calls are below this, the recommended price, the current market prices of today. You can see it 3660 for M&M, 152 for Union Bank, 2234 for Mastek. These are quite below the recommended price. This is an opportunity. We can say even Rallies also 261, little moved up, little higher compared to our buying price, and NBCC is 117.70 currently at the buying cost only. This is the opportunity. If anyone immediately wants to initiate the positions, these are the open calls one can look for with the proper risk and reward ratio. And similar way, these are the open position MTF calls which are there on our website. Nelco, Motilal Oswal Finance, Adani Port, Central Bank, Tata Communication, IDBI. As I mentioned, most of the stocks are at the recommended levels or slightly below the recommended levels, and it is an ample opportunity to initiate the positional calls which are ready-made in our website. So friends, now we have discussed about the MTF. We have discussed about the products of the MTF. We have discussed about the calculation of the income in the MTF. Now we will discuss about the market outlook, because you all know that when the market is in our favor, then only MTF works. Normally, when a trended declines, during the trended declines, even though we buy, there is a harder possibility, there is a higher chances that we could miss out the opportunity, and that is very important. That market understanding the market outlook is very important before the initiating the trade in the MTF. So we'll discuss the current market position, where the Nifty is headed, what is the short-term outlook of the market, what is the medium-term trend of the Nifty, what is this right time to create a fresh MTF positions, where to invest the large cap, mid cap, and small cap. Friends, let's discuss one by one. This is a Nifty daily chart. What we can observe, a constant uptrend in the Nifty over the last couple of months. What we can observe is a higher tops and bottoms, and the upside momentum has hit the roadblock somewhere around 26,250, 26,300 levels, where we had seen a beginning of the selling pressure or a downward correction in the market from the higher level. What we can observe in this daily chart, whether it's a reversal, whether it's an important selling, significant selling pressure, what it does, it indicate. This indicate the gradual selling pressure from the higher levels. The higher tops and higher bottoms indicates the strength of an uptrend. And after forming a higher top somewhere around 26,250, 300 levels, the market has reacted down. Last 2-3 sessions, market has been coming down. And the overall chart pattern is indicating there is a possibility of some more consolidation, correction down to the important support of around 25,800, 25,700 level. That 25,800 is a important gap support. Previously on 11th or 12th of November, it has formed. Still, it is open after 8, 9 sessions of its formation, as well as we can draw the trend line connecting the last higher bottoms, where we can see that the support base comes for the Nifty somewhere around 25,700 and 800. That is going to be the support for the market, and we expect Nifty to find the bottom reversal around that level and bounce back from the lows. This is the higher time frame, like weekly. The weekly also we can observe the constant symmetrical high tops and bottom. It has witnessed a decisive upside breakout of the downsloping trend line. It has reacted down, taken the support of the trend line, again moved up. It halted at the hurdle of around 26,200, 250 levels and reacted down. So the trend is, the short-term trend is showing consolidation, showing a smaller downward correction, but larger term trend, bigger trend remains intact. The overall chart pattern is indicating after a downward correction, somewhere around 25,700, 800 level, we could see bouncing back, Nifty regaining the highs of around 26,300 levels or the higher levels once Nifty consolidates or once Nifty completes its downward correction. Friends, this is the Midcap weekly chart. What does it mean? You can all observe. We all observe what is happening over the market in the last couple of weeks. The broader market index like Midcap, Microcap, Small Cap are showing consolidation moment, but the large cap is moving up very well. If you look at the chart, we'll see the large cap chart. We'll see the Nifty 100 later. But if you look at the Midcap chart, what does it mean? After the upside breakout of the trend line resistance, the midcap has failed to regain the strong momentum which normally comes after the important breakout of the hurdle. Here, what happened in 1 week, midcap has gone up. After that, it has consolidated at the higher levels. Selling pressure has emerged around 16,000 to 61,200 odd level, and it has started to consolidate in the last couple of weeks. So indicates there is a likelihood of some more consolidation in the mid and smaller cap segment or a micro cap segment till it reaches the support level. And once it breaks above, then we can look into this buying opportunity, especially in mid and small cap stocks. We will give the more number of calls in the MTF segment. Initially, there are open calls, and we'll look at the Nifty CNX 100 as compared to the other one, as compared to the broader markets. This Nifty 100 large cap is looking very attractive. Large cap index is better placed compared to the mid cap and small cap indices. Decisive breakout is on cards. What we can observe is currently taking resistance. We are not seeing any sharp weakness from the resistance currently placed at the consolidation. That technically these all patterns are indicating, though it is showing consolidation, eventually we could see a decisive breakout of the important hurdle in the near term. That means there is a large scope for the Nifty 100. That means conscience of the Nifty 100 means a large cap stocks are likely to outperform. They continue to outperform, likely to outperform some more in the near term. These are all the things what we can observe. And friends, yeah, these are all the things what we can observe. We can think that the large cap is showing a strong momentum. We are going to see some good amount of upside in the large cap as well. So the whole scene is very clear from your side. We have seen the MTF concept, calculations of the MTF and the products offered, open positions, market trend. The market trend is very clear. Short-term basis, there is a consolidation phase in the small and mid-cap segment, in the index segment, in the large cap segment as well. But large caps are outperforming the mid and smaller cap segment. There is a higher possibility of more outperformance for the large cap compared to the mid cap. And this is the time where one may look for the initiating the MTF positions. Friends, what we can see here, these are the support level, as I mentioned, 25,800, 25,700 levels. We will discuss. This support level is going to offer a good base for the market. When the market bounce back, there is a higher possibility of the beaten down stocks, beaten down sectors, large cap, mid cap, and small cap micro caps are likely to bounce back from the level. That is the area where we have to capture, as I mentioned. So this is a good time to initiate the MTF positions, start building your portfolios, start initiating the portfolios where the market is likely to bounce back. We don't know when exactly market to bounce back from the lower levels, but in a day or two, next 2 to 3 days, we could see Nifty bouncing back from the low levels. That time you could have a ready positions to participate in the market bounce back and upside in the in your stocks as well as the market. So friends, that's all from our side. Thank you, friends. Thank you for participating, and wish you a happy trading day ahead. That's all. We will conclude this webinar.